Welcome to the Trading Market Technicals morning call video for Thursday, January the 9th. Markets took a little bit of red. Dow Jones really took the grunt of the selling, down 68. The other indexes were pretty relatively flat. Nasdaq did manage to eke out a gain of 12.5. S&P down 39 cents. Russell down 17 cents. So very, very quiet. FOMC minutes came out yesterday at 2. Had a little bit of selling, but was non-impacting to the markets, and the markets kind of sold off, did what it had to do here. These are 5-minute chart of SPYs, and then rallied back into the day. But if you see, today we had nothing going on here. And this is where, if you don't know your trading parameters, a trader can really get chopped up and get messy. Now, what I do want to tell you is that I'm seeing a lot of money rotating into different sectors. And that's a good sign. When markets are coming out of one sector and putting to use in another, that's something that we like to see, not coming out totally out of the market. So that's a good sign, at least for now. I do think the markets are with this a little pent up of volatility that's starting to take place, and usually when volatility picks up at tops or bottoms, you usually have a directional change. Now, the markets continue to move higher, so we will continue to play the trend, which is higher. Okay, looking for quality stocks that have either pulled back into support zones or are just making a stair-step pattern to the upside on any profit taking on good quality stocks. And I think that's what you need to look at, even if you're day trading during the day. I would not be adding to any additional shares of any of your longer term trades. Swing trading 1 to 3 days is fine. Using options is another good tool. But other than that, I would be very, very cautious here. I do think the markets are pent up for another big push higher, and then I think we would start getting into that sell mode. Now, as you know, we've been doing these videos. The last few days have been very, very choppy, and that's something that is a concern to me. All right, let's move on into the indexes. I have nothing to show you as far as indicators. They are still the same. There's no change, so I'm not going to bore you with the details here of what's going on. If I do see something, of course, we'll post it on the video in the morning. So, spiders, 5-minute. It's exactly what I was just showing you earlier. You could see we opened up, we sold off right into around 9:50, 10 o'clock, rallied back up again, and then just chopped around all day waiting for this FOMC right here at 2 o'clock. They sold off, they rallied, sideways consolidation. They sold them again and rallied back. So this is very choppy and sloppy pattern. And we, as traders, we love volatility, but not like this. This is just, you can't get a string of 5 minutes, half hour, and then boom, they sell off again. So the market were to rally, a couple of hours, profit taking around lunchtime, base, and then rally up again. That's good volatility. But this, like this, just chop it around, does nothing for you. It's actually detrimental to your account if you don't stop it and don't identify what's happening and identify the pattern itself. All right, so let's go right into it. It's going to be a quick video today because there's really nothing going on. But I am watching the levels here. Is still 1820 in the ES. As you can see, we're up about 5.25 handles. Had some good data come out of Europe. So the Europeans are bidding up the S&P, and now we just literally took out this little consolidation for the last 3 days or so, and we had an inside day from the previous day. So now I do think that we actually move a little higher. I think we challenge the highs, maybe take out the highs. 1855 will probably be the high target of what I'm looking at, and then we would reevaluate from there. Okay, but right here, as you can see, 1846 is the high. So I think we get to that point at one point in time, and then we will reevaluate and see if the markets succumb to some profit taking here. Okay, S&P spiders. What can you say? Quiet, really, really quiet. You can see here, nothing but just consolidating again at the upper end of the range, above the 20, above the 50, above the 200, and above all of these key trend line areas. It is bullish. So I do see a test of the highs here. And we can actually get it either today, tomorrow, at least to making the move out of this base. I'm not saying we'll hit the highs today, but I do think that in the coming days that we should at least challenge the highs. And then again, we would reevaluate it, okay? Diamonds, again, took it on the chin most of the selling, but still hanging above this 2012 uptrend line, well above the 20 and above the 50. Okay, as you can see here, so really nothing wrong with that. IYT, we're taking a look at the transports above the 20, but again, inside day, really quiet here. So could be a calm before the storm. Maybe we break out of this pattern and then we move higher. That looks like what's going to happen. But again, let's let price tell us which way we're headed. And right now, the trend remains up, as you can see, in a stair-step pattern in the Russell 2000. Every time it hits the trend line, bounces back up again. This one didn't even get up to it, and it bounced up. So now I like risk on here, but with caution, because at any given moment, this market can turn on a dime, and I think that's what's going to happen. So let's be a little bit light on the longs. Obviously, taking the best trade setups is the way to go here. Qs. Trading on the Qs here. Take a look. We're above the 20. Had a nice little day. Tech is actually waking up again, getting a little perky here. So looking at technology, see what happens with the big cap tech. But I do think some of these tech stocks are at least paused to challenge the highs here. GLD. Let's go into the sectors here. GLD daily. Interesting. Again, I like to see if GLD can pop up right underneath that 50, that's horizontal trend line. I would take an objective short, at least to try it. I've been trying to get it, but every time you look for a short pattern, and then the next day you try to get short, it gaps lower, and it just didn't let me in. However, I would try a short at these areas here at 121, 122, or I'd be a better buyer on a gold, actually literally just smashing down lower anywhere around the 108 area, 110 area. I would look for a buy entry. But again, it would have to base, and we would need a trigger. Okay. Now, USO, which is obviously tracks the crude oil, I think crude oil here is in danger. It's going to need to hold 92. Right now, it's up 32 cents, trading at 92.65. But I think that it's going to need to hold here, because if we lose this support area, you could see we really have nothing here. And we have a little thin zone in our volume profiles up down to this area at 30.82. And then, of course, I would look for a buy trigger here. I wouldn't touch crude here, not at the moment. It would need to base a couple times, like it did here, base for about a week or so, and then we broke out. But right now, it looks like it's a little bit in trouble. Now, seasonal strength comes in from January, February, March, April, and then just up until the driving season. And obviously, a lot of that demand has been bought already and built into supply. So you want to look for an opportunity for crude, but I think crude needs a little bit of work before you look to buy it. But again, the seasonal strength comes into January and actually comes in the next couple of weeks, down about the 3rd, 4th week of January, looking at the Trader's Almanac, seeing the seasonal strength. So I think it needs a little bit more work. I would stay away from it. I wouldn't short it, but I would not be looking to buy it at the moment here as well. Now, going to the home builders, I like the home builders for 2014 for a big trade. I'd like to see a little bit of a pullback here. We are holding a 20. If you look at Lennar, here's one of my favorites. I do like Lennar. But if you looked at, I would like to see the market pull back a little bit more. We can get back underneath this 200, right into this symmetrical triangle break here. Maybe make a little bit of a higher low, come in a little bit more, and get everybody on the short side, and this thing really start to take off. But if you see the same pattern is throughout most of the charts that I'm showing you. Toll Brothers as well. Toll Brothers is a little bit more whippy. I don't like Toll Brothers as much as I do with PHM, Pulte Homes, and as you can, again, above the 20 trend line break. And I do like the KBH, and I've been mentioning that. Why? Because this hasn't gone yet, and once I think the next time money rotates back into the builders, this one's going to fly. And I told you also why. Look at the volume profiles. Really, really thin up here. So I think you're going to get at least a good challenge of the highs here. And even if I did, we go to a Fibonacci retracement. Let's say from here, you have 38, even a 50 or 61.8% retracement back up to these areas here would not be out of reach here. So I definitely think this is lining up to be a real good trade here in KBH. Okay, XHP, just show you the ETF, and this is actually hold up well. But you see the same pattern is consistent throughout this sector. So I do like the builders, and I like the builders here, and I'm looking for the market to sell off at least one more time before that. Here's the XLF, okay, getting to the banks, same thing here. Now Citibank has just exploded out of control. Next pullback should be buyed. excuse me, should be buyable. And I like the pullback here. If we can get back into this 8, I would not be looking to buy it. As you can see here, we're way out of the Bollinger Bands here, but I like this area here. If we can pull back to the 52, 53 area, then I think you can nibble into a little bit of a long trade. JP Morgan, same thing. But JP Morgan's a little bit stretched. I'd like to see JP Morgan come in a little bit more here. Goldman, again, great trading stock. I'd like to see it back to reality, back maybe that 171 area. But I do like the banks. I think Citibank, Wells Fargo. Yeah, let's just put Wells Fargo here and see what that. Oh, that's not actually. Something's wrong with the feed. Okay, but anyway, Wells Fargo is something I'm going to be looking at going forward. Also, what I want to show you is I want to talk about real quick, and I'll be dialing it down, is the healthcare stocks. Obamacare might be coming in. I'm seeing a lot of positive talk now with Obamacare, and maybe, just maybe, that some of these healthcare providers and healthcare stocks and even medical devices are going to actually profit from it. So if that's the case, and I've looked at the XLV and the IHI, which is the medical device ETF, that might be a play going into 2014, which I'll follow up with tomorrow's video. Okay, just keep that in mind. Take a look at those 2 ETFs, and let's take a look at some of the stocks that are in the ETF top 10 holdings, and see if maybe that provides some sort of either a pullback or a buy entry in them. But they're looking pretty good, and they're looking interesting. So that might be another play for 2014. But guys, there's a lot of great stuff setting up. Patience is needed here in this market. We are a bit overextended. No reason to start putting a lot of money to work at these levels. Let the market come in. Let the market pull in. Trade the best setups at the moment. But there's going to be tremendous amount of opportunity going into 2014. I kid you not. Have a great day. We'll speak to you tomorrow. Take care.